thanks everyone for taking the time to answer that poll. I'm going to go ahead and close the poll, and then I'll be able to share that with you and share the poll information. And so what we had on here was, are you currently using Autotask as your PSA solution? We had 20% people said yes, 63% of people said no, and 17% had what is a PSA. So Len, hopefully we can win some of those 17% people over and let them know what's going on. My name is Scott Clonico. I'm here with GFI Max. I'm the editor of MSP Business Management resource, a website that we run for MSPs and advice and tips and tricks. With me today is Mr. Len Di Costanzo. He's the Autotask Senior Vice President of Community and Business Development. Len, want to say hi to everybody?
Hey, how's everybody doing out there?
Okay, thanks, Len. Just before we get started and I turn things over to Len, I want to do a couple of housekeeping chores. We are recording this webinar. It will be made available on the internet for you. You'll get a link in about a week or so from the GoToMeeting system that'll show you where you can download it, where you can download the, what am I looking for? The presentation, the great presentation that Len's made here, and some other information. And then you can ask questions during the program through the chat interface there. And I will get to them. I'll do my best to get to them, and hopefully we'll have about 15 minutes at the end of the webinar to do all the Q&As. And so just feel free to ask questions anytime. If it's a really good one, I told Len that I'd interrupt him and ask him. But other than that, Len, I have turned the presentation over to you. Are you?
Yeah, we'll not. It doesn't seem to be letting me show my screen here. Scott,
okay. Yeah. There we go. There. That was mine. My bad. There we go. All right, Len. Okay. Please take it away.
Very good. So again, thank you all for. Actually, I always like to congratulate you for taking the time out of what we all know is a very busy day that you all have out there working and helping to pay the bills. So I am Len Di Costanzo, Senior Vice President of Community and Business Development here at Autotask. I always like to share a little bit of my history because I do like to let you know I was a solution provider for probably about 20 years of my life, just short of it, I think. Started my business back in the 80s and sold it in '02 and worked for a couple of solution providers after that, the one I sold to, and then another, and then joined Autotask. So a long history in the channel. A lot of what I'm going to share with you today is the pricing information and experience that not only have I gained from working in the business myself, but from working with our thousands of Autotask customers around the globe and delivering the content and revising it based on feedback. And what I'm going to do is kind of give you guys an Autotask overview before jumping into that content, which is pricing for profits, a guide for MSPs and IT service providers. And we're going to touch on pricing not just for managed services, but all of you out there still delivering a host of services. So we'll kind of build you up from a time and material, break fix, hourly pricing on up to delivering managed services using GFI Max tools and Autotask kind of in a combined way with perhaps some other tools you might be using. We'll have a special offer and go through a Q&A led by Scott. So first, for those of you who are Autotask users and customers already, definitely appreciate that. Want to give you a little bit of an update on Autotask, and for those that maybe are not familiar with Autotask or a professional service automation or PSA solution, I'll share a little bit about it with you. So Autotask is the #1 provider of cloud-based IT business management software since 2001. And basically what we say IT business management software, I think out there you see a lot of the term PSA or professional service automation. So you're going to hear it defined a couple of different ways. That essentially it's all about service automation and running your business better. And we start with our CRM module where, of course, you're out there trying to drive some business, whether it's to prospects or your existing client base. And Autotask has an integrated CRM module that allows you to build a pipeline, set up some quotes for your products and services, and hopefully you've got a project out there. Maybe it's a remediation engagement before you take on a new managed service client, and you're going to use our project module. So you'll quote it in our CRM, then turn that opportunity into a project. and then manage the project through the phases and tasks of remediation. Maybe it's a new network, whatever it may be. Collecting all your time and expense in that project module, sending out invoices, and then once you're done, going into that support role using our service desk module, managing your managed services better with Autotask and GFI. And that service desk module, I'll give you a little bit more about it later, but basically let you open up tickets and track your time and expense against tickets, and either against that recurring flat fee managed service contract or time and material break fix, whatever you may be doing in terms of a billing arrangement, and then using the billing and invoicing module to send out that invoice. And we know most of you are out there selling some product. We do have some great integrations with some product tools, and of course our integration with GFI Max front and center here on today's webinar, a really solid partner of ours. We'll go through a GFI Max Autotask integration flow in a second. We do help you build out your own network, collaborate with your clients better using our client portal. If you're working with larger clients that have an IT department, our TaskFire for internal IT gives that IT department a ticketing system that is tethered to your Autotask, so you'll never lose visibility as to what's going on in there in that IT department. Plus, they get to use a robust ticketing system. Our online community, over 50,000 users, and because you're GFI Max users and Autotask users, and potentially one of our users going forward, you probably are working with your peers. And our universal outsourcing module will let you manage tickets that you outsource to your partners. We're global. You can see the offices there, over 200 employees and customers in over 53 countries and data centers throughout the U.S. and U.K., and building that up as well. Autotask likes the open approach. We're open on our front end, allowing you to use our application in any browser as a SaaS-based solution coming from the cloud. You've got no products to install, no software to install, no servers to buy. Essentially, you buy Autotask one day, and the next day you have access to the system and are going through implementation and getting ready to go live through any browser that you have. And anyone inside your office can use Autotask. It's not just those billing resources. It's those back office folks, the billing people, the receptionist that picks up the phone, the executives looking at data. So way open on the front end for anyone to use. We're open in the middle because we're not going to force a particular way of running your business onto you, but you can certainly follow some of the built-in workflows inside of Autotask. But a lot of configurable workflow rules let you run your business the way you'd like to run it. And of course, we mentioned the integrations, and we do say we're open on the back end with all different types of integrations for all the different types of solutions you might be using in your business. Certainly a back-end accounting system, maybe Sage if you're out in the UK, maybe QuickBooks, a lot of different accounting apps integrate with Autotask, so you can integrate with an accounting app and send your invoices and do your collections out of that back office system. We're all about education as well. We know you're not going to be able to get out there and up and running perhaps on your own. We offer tons of live education and on-demand training. So a little bit about our integration with GFI, and what you see are a lot of event management, incident management capability built into Autotask and automated along with our integration with GFI. You'll get that GFI alert, and of course we've got our client portal, an email, or use a phone call, but any of those types of events can automatically create a ticket. Even a user phone call, you can open up a ticket using some keystrokes, and a little 2 keystrokes open a ticket. But a GFI alert will automatically open a ticket and kick off a bunch of automated workflow rules, assigning the ticket to a rep, letting your client know that you received that request for service. We'll talk a little bit about SLAs, but SLAs, if you're out there promising a response window, Autotask will start the clock ticking, let you know what ticket you have to work on next, so you don't miss your SLA, and then when that ticket's complete, send out an automated survey. And again, with our contract module, tie those tickets to a recurring contract. Even if you're delivering flat fee managed services, you want to know how many tickets you're opening, the time you're spending on those tickets, and in fact, if those contracts are profitable, so you can adjust your pricing down the line. So lots of automation built into our integration with GFI and inside of Autotask. So now that we've got that commercial out of the way, and hopefully I've shared a little bit about what Autotask is, and I think bottom line with Autotask, we're going to replace at least 5 applications inside your business. No more double entry of data. The data will move seamlessly through Autotask and that's going to be a real time saver for you. So for our content today, I'm going to share some customizable methodologies for pricing profitable IT services, cloud services, managed services. And bottom line is I'm going to build you up from calculating an hourly rate for your billable staff, and then take that and really look at how to calculate profits, costs and profits for break-fix services based on those hourly rates. Then we're going to talk about those automated managed services that you're delivering using GFI and Autotask together and any other tools you might have out there, and how do we take that same kind of pricing view and move it more and help you price automated managed service delivery, because that's really what it's all about today. The break-fix may never leave. You're always going to fix broken stuff. You're always going to put your hands on a machine, on a device. So when you see the term break-fix, it's really a general term in this session, meaning hands-on services. So you're always going to be delivering some type of break-fix service, but at the same time, you want to take some of those services and automate the delivery of those services and really take that pricing model, and we're going to show you how to apply it not only to automated managed services, but to cloud services, and perhaps you're buying some third-party services and reselling them to your client and including them in your package. Let me see here. I'm just going to fix my mic. Is that any better, Rich? Just put it a little bit away from the lips.
Sounds good over here.
Very good. So, and then of course, with all this work on pricing, we're going to talk about 1 year of revenue and see what it looks like, so you can get a little bit excited and then give you guys some next step actions for consideration. We all good, Scott?
Yeah, it sounds good. I mean, this is actually, pricing is like one of the #1 things I know that people, when they're looking at MSP Business Management, and obviously the registration on the webinar shows that a lot of people are interested in it. So take it away, Len.
Very great. So with these insights, we will definitely achieve our goal. And I say customizable pricing methodologies because I will just share with you, I'm not an accountant, but I do understand time, and time is really the only inventory that you have as a resource, a billable resource. And you really need to understand the cost of those hours, because whether you're delivering automated managed services to hundreds of machines or you're one tech working on one machine, you really have to understand the impact it's going to have on the business. So these insights will let me share customizable pricing methodologies. I'm not an accountant, and all I'm going to tell you is I applied these principles in my business, but I always had an advisor, a certified accountant, a financial advisor, to make sure that whatever I'm sharing with you today, that you apply it in your business the way your financial folks want it to be represented. So again, this is customizable, and a best practice is not typically something that you're going to follow to a T, but it's something that you're going to form into the way you need it to manage your own business. So always seek financial advice, I guess, is my caveat to this session. So what we're going to talk about first is calculating staff hourly rates. So you might be wondering, hey, I thought I was going to learn about pricing managed services. Well, the same billable staff that currently deliver your services, or in the past delivered all break-fix or project-based services, time and material services, are the same folks that are using GFI and Autotask now to deliver those automated managed services, and they're going to be the same folks that work with those third-party vendors in the cloud, where you're going to perhaps buy an email box and resell it to your customer base. So the same staff prepare and deliver managed and cloud services that have been delivering services the way you've traditionally been delivering them. The key is to identify costing variables for billable staff, and then we can develop profitable pricing across all the services in your catalog, because at the end of the day, even if you're using an automation tool, you still have a body working that tool, monitoring the screens, looking at reports, and we just need to understand what that individual costs. And I think that's really the key here, is understanding costs. I may talk about a particular profit margin or a markup value, but I've heard of value pricing. I've heard of, just marking it up 20%. The key is, if you understand the cost of delivering your service, you can price it any way that you want and achieve the profit that you want. So what we're going to do to calculate hourly rates, is talk about 5 key variables, and the first one is the number of working hours. In our examples, we're going to use 2,080, which is 40 hours times 52 weeks. I used 2,080 for a while, but my accountant said, gee, Len, 40 hours times 52 weeks here in the U.S., 40 hours, anything more than 40 hours is overtime. If someone worked a minute over 40 hours, you had to pay overtime. And if you didn't, and it was found out or your employer reported it that they weren't paid, you could get in some trouble. So I actually worked on a 37.15-hour week. So again, apply these numbers to fit your business, but we're going to use 2,080 hours in our example. In the U.S., we have the Small Business Administration, and maybe you have some local authority in your region of the world that will share some common statistics in terms of working hours. And here we have burden, and in burden, we're going to use a number 30%. And burden here, the way we're going to talk about burden is as an individual employee has certain costs only for them. Their taxes, whatever you're paying on their salary in terms of taxes to the government. Perhaps there's days off. Perhaps you're reimbursing them for a car or a mobile phone, but not other employees. So the burden is the sum of all of the fringe benefits that you're actually providing to a particular employee, and that 30% is kind of a markup of the person's base compensation, and we're going to use that number today. And again, your burden may be different. I've worked with hundreds and thousands of solution providers and done polls, and the range of burden has been from 8% on up to 50%, depending on the individual, and at times it's even higher. So burden varies across organizations and regions of the world, and again, just be aware of what your burden may be. Utilization rate, another key value, we're going to use 60%. And I like to call utilization rate, at least in terms of pricing, the forecast of billable time versus non-billable time. So we're going to talk about a 60% utilization rate, meaning this resource is billing 60% of the time, and the other 40% of the time, you have to know what they're doing to make sure it's valuable time and they're doing something valuable with their time. Hopefully they're working on some internal projects, perhaps some admin work that is not necessarily billable to a client, but you definitely want to have a pretty high utilization rate, especially in a break fix or time and material model, and we'll see the impact of that as we move through the session. Overhead, another key.
Oh,
yes.
Sorry, just real quick, we had a question here from David on this slide. What exactly does SBA stand for up there on number 2?
Yeah, well, I had mentioned here in the U.S. we have an organization called the Small Business Administration.
Okay, yeah.
In your region of the world, you might have another authority that you can go to, but they will share common figures. So you can go, for example, in the U.S., and if you want to see what a typical number of working hour is in a small business, you go to the Small Business Administration. If you want to see what a typical burden for a service organization is, they'll give you an idea of what it is. And in fact, the SBA here in the States said 50% is a common utilization rate. I'm using 60 because that's what most of the solution providers share. In fact, a lot of them share 80% as a utilization rate.
Okay.
So, right, and the key here, again, is these are just numbers that we're going to use in examples, and yours are going to be different without a doubt. So hopefully you don't go out saying, Len told me to use 60%, because if you're only going to be billed 50% of the time, it's going to really affect your billable rates, and we'll see that. We'll also talk about generating a profit in your business, of course. So we're going to mark up our cost by 30% to come up with our selling price. And I use markup. It's a little bit easier to calculate here in the session, but you may, kind of calculate profit any way that you want. So the markup will yield a certain profit. The key is, again, understand your costs so you can generate the amount of profit that you want to generate for your business. Well, first, I put a little warning up always because a lot of the businesses that we work with here typically have started up from the tech side, much like I did. And I was a software developer, but my partner was actually a CPA or an accountant. And for the first 2 years we worked together, I really got to understand the value of time. And time is money. It's a it's an age-old term. Time is money, and surely you're going to see it. For those guys on the business side, maybe it's not so scary to you, but a bunch of numbers I'm going to show up on the screen, but we'll kind of walk through them really slow here. And you'll see $75,000. We're going to talk about a U.S. $75,000 base compensation employee. And you see the column heading says pre-automation salary example. So this is a pure, how do I calculate an hourly rate for this employee kind of view. And then we'll talk about taking this particular resource and letting them use some automation tools like GFI Max, like Autotask, and delivering services that way. So a $75,000 a year resource working 2,080 hours, and all the yellow that you see are the 5 key variables we talked about on the previous slide. That 2,080 hours, you do the math, costs you $36.06 an hour. And I'm going to use U.S. dollars. This is a global webinar, so hopefully you don't get offended, but please use your own symbols for your currency. But we're going to talk U.S. dollars here for the most part. So $36 an hour. If you add that 30% burden and mark up the base comp and mark up that hourly rate, you now see that that $75,000 a year employee costs you $97.05. The hourly cost, $46.88. And of course we know that you're going to send your engineers, your billable resources out for education. So they're going to be out of the office maybe a week. Maybe they go to trade shows and they can't bill at a trade show. You've got some sick days, you've got some vacation or holidays, and there's going to be certain hours they can't work. That's what this 160 hours is all about. That takes the 2,080 hours down to 1,920 available hours to bill. We take a 60% utilization number. You now have only 1,152 hours of the 2,080 original hours where this resource is going to bill. And of course, as you set up your billable rates, we are forecasting the potential of a 60% utilization. And the key is you always have to track back to see if you're in fact at 60% utilization, because if you're at 50% utilization, then that available number of hours is going to go down and your cost will go up for this particular body in terms of their billable or direct labor cost time. So 1,152 hours, if you do the math, ends up costing you $85 an hour. Why do I do this? Well, for me, if I only had 1,152 hours to bill for this resource, I wanted to know what that real cost was, because I wanted to recover that cost in every hour that they billed. So would have had to add on to everybody. So I just tried to apply total cost to an individual and make them pay for themselves. You have to decide how you want to do it. Bottom line, I still have to add my overhead of 30% onto my hour, which drives that hourly cost now to $110 an hour. That means I've got to bill over $126,000 a year just to cover my costs for this particular individual. If I want a desired markup of 30%, my hourly rate for this individual is $143 an hour. And invariably, I've seen this rate go out at $1.25, and then maybe people will give a credit on an invoice. So bottom line is, if you know what your cost is, you know what your hourly rate, selling rate should be, well then as you start crediting invoices, you're going to see what the impact is on your profitability, and maybe you'll do less of that. In any event, at $143 an hour, this resource should generate over $164,000 in revenue and $38,000 in profit for your business, or a 23% profit margin. So,
Excellent. Oh,
I just,
sorry. Go
yep,
ahead,
go
man.
ahead.
I'm sorry. Well, we
I was
had a
just,
couple people ask if this was is this available, the spreadsheet available, or is there a price calculator that people can download or use online somewhere?
so this is actually part of a what we call our Build a Managed Service Practice Accelerator program, Scott. So I don't
Okay.
typically make this available without someone talking to one of the Autotask folks. So I'm going to
Okay.
share my email at the end of this session. Anyone can reach out, say they'd like to see this, and I'll just have them talk to a rep. We have a 15-hour course curriculum that takes you through defining your services, pricing them, building out an ops center, selling the clients, selling the prospects, and they can get access to all of these Excel sheets through that kit. And if it's an existing Autotask customer, they can get their hands on it, or a new customer, they can get their hands on it.
Okay, excellent. Thank you.
So, of course, though, you're recording it, Scott, right?
Yep.
And it'll be up online, and people could listen to it as they wish. So,
Right.
the key here that I like to highlight, this $110 an hour cost for this resource becomes a very important number. And inside Autotask, you can record the $110 an hour on a resource, and as that resource works on projects or tickets, you now can see if this individual is profitable, and of course, if all your staff rates have been calculated. Overall, you'll be able to determine contract profitability, ticket profitability, contract profitability, and overall account profitability right inside Autotask. So just want to share, again, inside Autotask is this resource utilization report. All of your resources, you can put that number of hours that you have available, what the 60% utilization goal is in terms of hours. There's the paid time off. So a bunch of key pieces of information are tracked inside Autotask, much like we just calculated, that allow you, again, to understand the cost and profitability of a resource and on up to the account level. So we now have kind of worked through an hourly rate, and what we need to do is understand the services that you're delivering. So if you've been in business for a while, maybe you're just starting out, but the bottom line is you have to have an IT service catalog where you list your services that you deliver for your clients. And of course, the services could be certainly services you're delivering now and services that you evolve over the future. Certainly, as you're using GFI Max and Autotask, you may add services to your catalog. Bottom line is you have to understand how long it takes to deliver that service. So if you're putting up a desktop and you have a setup desktop service or a setup file service or a setup iPad, whatever service it may be, it may take you 2 hours to deliver it. Now we take this resource that costs $110 an hour, and of course if it's 2 hours to deliver, it's going to cost you $220 to deliver it. Bottom line is define your IT service catalog, and that's actually the first course in the series. And if Scott wants to, sometime in the future, we can share how to build an IT service catalog. But bottom line is, if you've got proposals out on the street, if you're delivering quotes right now, you've already got services defined. And again, the key is having a tool like Autotask to track the services and how long it actually takes. If you think it takes 2 hours, but it takes 3, you're not generating the profit that you want, and it's costing you more to deliver the service. So again, understand the cost, how long it takes to deliver the service, and then we can determine costs and profits for the services. And what we're going to do in the next example is deliver service to one desktop machine in a break-fix, hands-on kind of way, and then we're going to scale it to 20 desktop machines. And of course, we can't really scale in a break-fix kind of a way, but this is going to allow us to set up our managed service pricing example where we will scale using automation versus scaling in more of a physical hands-on kind of way. And of course, if you have the right tool in place, you're going to capture time easier against a service and be able to, again, understand your profitability. And that typical Autotask customer gains 15 to 25% more billable revenue as a result of having the cost and services defined inside a PSA tool or an IT business management tool like Autotask. So what we have here is another slice of an Excel sheet. And just as servers and desktops and iPads and mobiles have product numbers, you want to try to give an item number or certainly some identifiable SKU, if you will, to a service. We're going to define 7 services here, and they're going to be in the desktop services group, and these are the individual services. And you might take a look at each of these services as perhaps a progression of services delivered on one PC to perhaps clean that machine up, eradicate the virus, or rebuild the machine that was wiped out. And again, these are just numbers. Right here are the estimated hours to complete each of those individual services against a machine, totaling 6.5 hours. And having done this for a while, I certainly know in a manual or break-fix kind of way, without imaging, without automation, you could be delivering 6.5 hours of service to clean up one machine. And what you see right here is I've got no control over this environment. So in a break-fix world, without perhaps Active Directory, without perhaps the tools that GFI Max provides, a user can come in and install their own software and perhaps put a virus on a machine, hit the internet, download a bad file, hit a bad website. So one of the keys to managed services is taking control of the environment and locking down that desktop once you have executed that remediation project to pick up this new client. Clean that environment up, lock it down. Problems like this don't happen, then deliver automated services. In this example, no policy management, and what we're going to talk about is that $110 an hour rate that we just calculated. And I'm going to hopefully be able to give you a, Scott, can you see my mouse moving?
Yep, sure can.
So right here, just imagine you have to get in as an engineer and find out what's on the machine. So in a manual way, you're figuring out what's on the machine, software, hardware. Maybe you've got to uninstall, reinstall an app, update the virus software. Maybe you've got to install some patches, and of course maybe run some disk maintenance or clean out the fan, whatever it may be. Because you're on the machine, you might as well do something to further clean it. Bottom line is this service desk is you taking that phone call from the user and maybe spending a half hour trying to solve that problem. And if you're billing it, good for you. Most are not billing it and wait until they get out on site. So bottom line, a string of services that you deliver against one machine. What we're going to talk about in a second is those 7 services can be automated and or outsourced to reduce your cost and scale your service delivery. And that's really where we're going here is you're out there delivering managed services. I hear it a lot. How do I sell managed services to my client? They like the way I deliver service now. Well, when I deliver the 15 hours of content, I always get, hey, Len, when should my sales team jump on? Should they jump in on the selling the clients course? And I say, no, have them jump in on the defined services and then the pricing and basically sit in on the whole session, because this is going to help you sell managed services. When you show your client how much a break-fix event costs without managed services versus with, they will easily understand the concept behind it. Now, of course, if you're going on site, you might have a one-time travel fee, and here I'm putting 100 US, and being from New York City, it certainly could be an hour there and back to the client location, could be a half hour. You got to take a train, you have to park. There are some hard costs associated with traveling to a site. You have to account for that. This is the IT service event cost. So each individual service, because we know it takes a half hour to do asset management, a half hour to install the software, we can easily determine the cost for each service. More importantly, the overall cost of fixing this one machine to your business is $815 US. And I say 9 to 5 because those are typical working hours. If you're working after 5, you might be charging time and a half. And if it's on the weekend, you might be charging double time. So the key here is understand the service, how long it takes, what's the cost, and then if you want to put a 30% markup to yield $245 in profit, you're going to send an invoice out to your client for US $1,060. How happy is the client going to be paying that bill? Probably not too happy. Now, being Italian and from New York, I never really had trouble collecting my money, but it still was hard to collect $1,000. And in fact, I know many folks, I have asked the question live many times, how many people have sent a bill like this? Well, of course, a lot of hands will go up. Some people will, gee, that 6.5 hours is too much time. I do some imaging, and I'm like, well, again, these are just examples. The bottom line is we want to reduce the invoice price to the client as much as we can while increasing profit, but they're not going to pay $1,060 for the most part, and you might credit them and say, look, just give me $900, just give me $800. Bottom line is, if they just give you $800, it costs you $15 to service that one machine. And what kind of business is that? Scott, any questions coming in?
No, we had Thomas actually had a pretty good comment about one of your earlier slides. He said, I've been in the business for 8+ years, and I have to say that this is actually the first time I've ever seen value to a PSA other than tracking and CRM. So that was a little, make you feel,
great.
Give yourself a pat in the back there, Len.
Excellent. So again, the key here is I'd love for you to be interested in Autotask and GFI Max. I think one of the keys for us here is we really try to help our community of users run their business better, and not only does our product help, but again, through Autotask Academy and this type of education, just as you guys are doing, Scott, over at GFI, we want you guys to thrive and survive, and that's the key behind any of this webinar or educational content.
Mm-hmm.
So again, now I'll just always share some key areas that, of course, Autotask, as I've mentioned, will track service costs and profitability. So now let's scale our break-fix service delivery. We're going to go from servicing one machine to 20. Why am I going to do that? Well, typically you're going in, you're fixing that one machine. If it's a 20-user client or prospect, maybe you got the call for one machine, I would bet you that you can make a safe bet that the other 19 machines in that business are ready to get corrupt, just like the machine you're fixing. So for you to service each of those machines and tell your client, I might as well fix all the other ones, you're going to see numbers like this, and you'll know why your client will say, no, just come and fix it when it's broken, and why they don't understand conceptually that managed services would actually work against every machine all the time, very proactively preventing these types of problems from happening, as opposed to calling you in every time you're needed. So here, use this example for scaling versus a later example, and we'll see. But the key here is that 6.5 hours becomes 130 hours. That $110 an hour cost against those hours, plus the $100 travel fee. And now here, I'm envisioning one tech visiting this client, since it's a 6.5 hour service event, 20 working days in a month, they're going to go 20 days or $2,000. Now you may send 2 techs over 2 weeks, and half that cost, again, just an example, just numbers, it's going to cost 20 times more to service all these machines in a break-fix model. So instead of costing you $815, it'll cost you $16,303 to deliver services against 20 machines in an office, to clean them up and make sure the problem doesn't happen again. Keep in mind, if you don't execute any policy control and lock those machines down, the minute you leave, and of course if you don't apply any of your managed services to those machines as you clean them up, they're going to break as soon as you walk out the door. They're going to be out of date. Something wrong is going to happen again because you haven't locked it down. You apply your 30% markup, that service event profit's going to be pretty high, $4,800 to service 20 machines, and you're going to send that $21,000 invoice out to your client. Now, having been in this business long enough, I remember doing this quite often, and there weren't any automated managed services available, so clients were kind of okay with this kind of service delivery. You might have broke it down and maybe charged them only 15% markup because you were going to pick up this new client once you cleaned up the environment. But the bottom line is today, is a client going to really pay you $21,000 to update 20 machines one time, let alone twice? And again, the key is you might have in the past been able to service each machine. You might have even been able to execute an inventory of those machines because you didn't really have the kind of tools like a GFI Max Autotask combo to make it automated and easy. So you might have had to do this, and they would have had to pay it. But of course, there's a better way, and that's what we're talking about here today. So we've talked about hourly rates for billable resources and looking at service in one machine and scaling to 20. But what this is about is automating service delivery by putting managed services into your bag of tricks, and we're going to look to determine the costs and profits for those automated managed services delivered to many machines. So, same factors used when pricing break-fix services are still in play. However, we're going to focus less on utilization rate and really, again, go into that forecast mode and look at forecasted managed service revenue, and then take a tech, and instead of them being 60% utilized, they're 100% utilized, and they're going to help earn that forecasted revenue, and that tech is always working on delivering managed services. So imagine, again, a NOC type environment, a network operations center, or perhaps, again, from the cloud, you have an individual working and using the tools from the cloud, monitoring them, looking at the reports, making sure that you can deliver automated managed services, and that's what their focus is. When I say look at forecasted managed service revenue, you're going to look out over your client base and see how many desktops and servers and routers and various devices are there, and then you've got a plan to convert them, because there's going to be a time when you're delivering the service the way you do now, and as you move your clients into the new model, you'll be changing the way you earn your revenue from that client. So there is a process. You're not going to day one turn everybody on. So keep a focus on the potential revenue and what your conversion rate is going to be and over what period of time. I'll give you a spreadsheet view of that in a second. The key is, again, knowing the number of desktops, devices, or users that you're going to support that are going to help you generate the revenue. Now, we're focusing on a desktop. That doesn't mean I'm advocating pricing per desktop, pricing per server, price per device, but you can certainly price per device, but if you understand the cost of servicing the number of devices in a location, perhaps you can price by location. Perhaps based on the type of business, is it a banking organization, is it an accounting organization that needs their machines up and running all the time? Maybe it's value pricing for the site, or perhaps price per user. When I was delivering my proactive recurring services before they were called managed services, we were charging $200 a user. Why? Because the math worked, and that may be another avenue for you. But the key, again, we're going to share understanding costs so that you can build your own pricing model and differentiate yourself from the competition. So what we're going to do here is take a look at that same table of a $75,000 a year resource, but we're going to take a different look at it. And what you see on the left side of the arrow is the pre-managed service automation salary example. This is what we worked through earlier. And on the right side is the salary example of that same resource, but they're using tools like Autotask, like the GFI Max suite, and they're going to put some automation into what you're delivering, into the services you're delivering into your client base. So we still have the same number of 2,080 hours that they can work. We're going to put that 30% burden on this individual and come to that 1,920 hour number. But here's where we see the difference. The salaried employee on the right is working 100% of the time on delivering managed services. The employee on the left is 60% utilized in a break-fix model. So what you see is the estimated billable hours are the same at 1920 if I'm in a NOC and I'm using my tools to deliver service. That drops my hourly cost down to $51 an hour. And because you're not going out on site, typically that $100 fee I showed you is put into overhead, especially because you're not billing it. If you're billing it, perhaps it has less of an impact on your overhead. But the key here is we've seen at least a 10% drop, and in certain places more of a drop in overhead as you're delivering automated managed services. So we dropped that overhead rate just a little bit to show you where you can be. And we now see that our hourly cost for this individual is down to $61 an hour versus $110. You can actually more than double your desired markup and sell your services at a reduced rate using these types of calculations and automated service delivery, and as a result, generate almost $200,000 in revenue from one individual and more than double your profit. And the key is you're going to service more devices, more seats, because you're using automation and you're not running around based on a customer break fix call stressing out you and your business. The key here is I'm using 250 users or seats or desktops here in my calculation, and I've heard certainly one tech can support 500 machines. I've heard 200 machines. The key is it's a number, and you really have to understand the impact the tools are going to have on your business, the speed of your engineers, and how you can actually execute services. So the key here is we're taking a view in time of a particular situation, and I guess the real key here is if you've heard of the ITIL Best Practice Framework, Information Technology Infrastructure Library, there are some best practices. Actually, ITIL is a series of 5 books, and there's one book that actually is all about transitioning your services into your new services into your client base. So you have to have a service transition plan, which requires you to test the services that you're about to deliver in an automated way, perhaps on yourself, perhaps on some closely held clients, and then rolling it out. And hopefully over that service transition time, you can get a gauge on how many seats you can support and how long it takes to deliver certain automated managed services. And we'll kind of delve a little bit into it as we get close to the noontime hour here in the U.S. But we're going to take that $61 an hour cost and build up our automated managed services that we're going to deliver to 250 machines. And the same 7 services are here. I've added policy management in there because through automation I can take control, lock down the desktops that I'm going to service. And that 250 machines make up, and I'm going to pull a number out of my hat here. I've surveyed my client base. There's 500 devices, and I'm pretty confident I can transition 50% of those machines in the next 6 months or in the next year, whatever time frame you're looking at, and transition them to my new automated managed services. And as I look at my tools and my resource and those break-fix services that I can now automate with my managed service tools, I still need to measure how long it takes to deliver those automated services. In terms of patch management, I still have to maybe download the patches and test them in my NOC, in my operations center, and understand how long it takes to bundle up those patches and then push them out to my machines. If I'm going to deploy antivirus and update that and make sure the updates worked and go out and kind of test that it doesn't clobber a particular desktop or server, because again, certain line of business applications might not like the new version of spyware or antivirus. It might not like the new version of Pack and Service Pack Management from Microsoft. So you really need to test it. And again, I'm using 40 hours here. That's just a number. Don't say Len said it takes 40 hours for Patch and Service Pack Management. Some folks take 20 hours a month. Now, the column heading, hours per month involved in automating the managed service, again, if you don't want to test your patches, it might take you less time. It's up to you to define your process and how you want to sell that service to your client. Do you want to fix the machines? If they don't work, the patches don't work, or a clobbers a machine, your choice. Bottom line, with the numbers here, that $61 an hour cost, I can take each service and find it takes $10 to deliver service to one machine for patch management, and all of the service event costs for each service totals up to $23 a machine cost to deliver these services to my client machines. Now, we talked about a service transition plan. You're not going to get $23 in cost right out of the gate. Let's say you've only got 125 machines under managed services. Well, the cost to deliver the service is actually $46 a machine. But the key is you're still generating revenue with your other clients the way you always were. You're still perhaps delivering a setup desktop service and other services. The key is you have forecasted the number of machines over a certain amount of time, and you just need to balance that transition with generating enough revenue to keep your business going the way it always has. The key is Once you hit 250, you're at 23 cost machine. But if you hit 500 desktops, your cost is going to be half of 23. So as you add more machines and scale service delivery, you're going to reduce your cost, and you may pick up 1,000 or 2,000 more machines and have to add a second body. But again, the same principles will apply as you transition into automated managed service delivery. Bottom line, $23 in cost per desktop, add my 70% markup, I can sell these bundles of this bundle of services for $40 a desktop and generate $10,000 a month in revenue and $4,000 a month in profit for this individual. Now, if you go back to this particular number of 96 hours, if this individual is only spending 96 hours delivering these managed services to 250 machines, there's 160 hours in a given month. What are they doing for those other 64 hours? Well, they could be doing break-fix service delivery. They could be picking up the phone and generating some revenue doing remote support. Bottom line is, do you want them focusing on helping get more machines on and being more efficient in managed service, or generating revenue another way while you ramp up your managed service delivery? Again, just some considerations for you as you move more into managed services and automation. And again, the key is defining your services, and inside Autotask you can define the services, if they're delivered monthly, what they cost you to deliver, and what you can sell them at, and what particular GL code that they're going to be tracked against. So we've talked about break-fix services. We've talked about automating the delivery of certain of those services which can be automated. But now we want to take into account a couple of other factors. Perhaps what we want to do here is add more services to the bundle, right? We want to not only add more services to the bundle, and here we can see the same 7 services we've been talking about. The 7th service, the service desk. In this example, I'm not going to use my resource to pick up the phone. I'm going to go buy the service desk from a third party. And service number 8, the email box, I'm not going to install an Exchange server anymore. I'm going to go buy an email box from Microsoft or from some vendor, or perhaps I've created my own email service in the cloud. Bottom line is, you still need to track the hours per month involved automating the managed service. And in terms of buying a service desk from a third-party vendor or an email box, you're not necessarily automating that service with your tools, but you do need to allow for the time that your operations center resource is going to be devoting to managing the vendor and still looking at the email box and seeing how many emails are sent, is the spam working, what number of tickets were opened with that third-party service, are those tickets opened up in your Autotask, can you produce ticket reports? So not only is it a time automating the service, but whatever time you're spending to deliver that service, you need to understand that. In certain cases where you're buying from a third party, for example, in the service desk service, you're going to spend 12.5 hours a month managing the vendor, managing the service delivery, and you're going to spend $7 a user to outsource that service. Now, you may spend $15 per user. It depends on the organization that you use. Bottom line is, understand the hard cost in this orange column, and of course the service cost. And as a result, you're going to understand it costs you $10 to provide an outsourced service desk to your client. Add in your markup, 70%, you're now going to be able to sell a service desk to your end user for $17 a user. If you bought an email box, you still got to manage the vendor, look at reports, make sure spam's working. You want to go into your monthly operational review meetings with your client with data that shows you do have value. Hey, do you know how many emails you're sending back and forth? Do you know how many viruses we found in your email? Do you know how many we've blocked? These are still very important offerings and reports that you have to deliver as a managed service provider or as a good solution provider with a managed service practice. So here, you might be spending $5 for that email box. combined with your 4 hours of time, it's costing you $6 to deliver that email box service. Mark it up, you can now sell an email box for $10. So you now have created 8 services in a bundle. Now, you might add a 9th service. Perhaps you're selling a cloud-based line of business application, and every user with a desktop or a laptop is going to get this bundle that includes the line of business. Or maybe you've got 10 services. The key is take that service. Is it automated? How much time are you spending with a body? What's the hard cost? Add it together, and this bundle of 8 services delivered to 250 machines will cost you $39 a bundle. You mark it up 70%, $28 in profit per machine. You're going to sell an 8-service bundle for $67 a machine. I apologize. Looks like I might get a couple minutes over here, guys, but I think it'll be worth it for you, hopefully. So at $67 a machine, you now can actually deliver a service called Set Up New Desktop and use the Autotask client portal, for example, that if that client is making a new hire, that they will tell you they want the new user bundle, and you will instantly know to order the email box, order the desktop, which is another, on top of it cost to this bundle, and then immediately you'll have $67 a month coming in for that new desktop for that new hire. And of course, inside Autotask, again, there is a contract where all your costs and profitability will be reflected against a particular type of billing relationship. Here, we have a recurring service contract, and we're going to tie that $67 a month and be able to see our profitability and our costs. So let's take a look at what revenue might look like based on the examples here. So what we're going to look at in month 1, you've got a $67 desktop fee. That's your bottom row. You've got 40 desktops you're going to transition in month 1, and if you do the math, that's $2,680 in desktop revenue, or MRR, monthly recurrent revenue, to deliver that bundle to 40 desktops. And why 40 in month 1? Well, we talked about a service transition plan, and as you looked out over your client base, perhaps you've got 2 clients that are 1 server and 20 users. Perhaps they're 2 servers and 40 users. And again, these are numbers. You're never going to have a scientific 40 across every month, as is represented here on the desktops transition row. But again, it's an example and giving you some food for thought that you need to plan the transition of your base into this new model. And if you do, you get $2,680 in month 1. And on the server side, we do the same calculation, and we've come up with $295 for a server, and you're going to transition 2 servers a month. You're adding $590 in MRR, or monthly recurrent revenue, for delivering server managed services. Now, I have seen numbers as high as $3,000 a server, because perhaps there's a little disaster recovery or business continuity involved. Again, understand the services you're delivering against the server, the desktop, whatever device, and again, understand those costs, and then price by value, price by markup, by profit margin, whatever you may be, but always understanding your costs. So in month 1 of my transition to automated managed services delivery, I'm going to generate $3,270 in recurring revenue. By month 6, as I add $3,270 a month, because I'm transitioning 40 desktops and 2 servers, mind you, I don't have any printers and routers and any other devices represented here. But what you see is in month 6, I'm at almost $20,000 US in recurrent revenue, and by month 12, I'm at almost $40,000 a month in recurrent revenue. So after 1 year of delivering managed services and transitioning, in this example, I've transitioned 480 desktops and 24 servers. I'm just over $250,000 US in recurrent revenue. And if next year I didn't add a new client the whole year, I'm at almost $500,000 in recurrent revenue. Every time you wake up every month, you're going to send a bill out for almost $40,000 because your tools are going to work, your resources going to work, and you're delivering managed services to 500 machines. And if you just take that second year and add 40 desktops and 2 servers a month, after 2 years, you're at $725,000 a month in recurrent revenue. So the numbers grow, but more importantly, those numbers stay there. You don't have to wake up every month and sell a new deal to generate revenue. Of course, generating a new deal makes you stack on some recurrent revenue. And the key, again, here with Autotask, as it collects time and expense, you can send out those recurrent invoices to your client and then hand off that invoice to your accounting system for collections. So, some next steps for you. Determine your values for those 5 pricing factors and come up with your hourly rates. Make sure you have that IT service catalog defined. And then, of course, understand the cost for those services and the profits that you can generate. And then which of those services can be automated with GFI Max, with Autotask. And, of course, take a look at your landscape of clients and understand how many seats are out there. And based on the new automated services, how many can 1 tech touch, or 2 techs, or 3, or 5? It's up to the size of your business, and I use the smallest common denominator here for my examples. And of course, with this information, finalize your pricing and then apply it to your bundles and SLAs and other services, and go out there and sell profitable IT services. So just want to share, you can connect with us on Facebook, LinkedIn, follow us on Twitter. Rich Coolian's out there communicating with our community all the time. For those of you who think Autotask is worth a look, shoot me an email. I'll give you my email in a second, or shoot an email to sales@autotask.com. We've got a special, a $1,000 voucher for Autotask Pro, which is good to cover up to 50% of any services during your initial purchase of Autotask, and it's for new customers who buy today through the end of August. And get yourself rolling here by either emailing sales or give us a call at 518-720-3500, extension 1. Also want to share before we get into the Q&A, we will be participating in GFI's partner conferences around the globe. I'll be at New Orleans. Not sure I'll be at any other locations, but stop by and say hello to us while we're at the events. Definitely someone from Autotask will be there. So Scott, appreciate getting me on here to talk with your customers and mine, and share some of this valuable information.
No worries, Len. Thanks a lot. I'm going to send around a, you can still register for our customer conferences, and I'm sending around a link now to everyone. While you were kind of talking, Len, I dug up some other interesting links. Like I found the Bureau of Labor Statistics kind of had some average hourly technician, IT technician rates, which, you know, could make for some interesting reading and hopefully some interesting information. As I said, just for everybody that's out there, we are all recording this webinar. It will be available online next week. You'll get an email from the GoToMeeting system that'll tell you the URL where you can download it. And I think Richard is going to help put together a little PDF too of some of the highlights of this. It's also going to be on iTunes. I sent that link out around as well. And if you're around, we're going to have another webinar at the end of the month, and that's going to be on case study, a GFI Max case study, how one person helped grow his business with guerrilla marketing. So I'll send the link around for that. And if you enjoyed this webinar, hopefully you'll be around for that one as well. And Len, if you're ready, I'm going to throw some questions at you.
Sure.
Okay. Actually, we got lots of complimentary notes. Everybody was saying they didn't mind sticking around for the extra time here. Let's see if we can. Oh, you were talking about. I'm going to ask you this quick one so I can get a link and then ask you a longer one. You were talking about a series of books at one point.
Oh yes, actually, we a lot of what you saw here and what's kind of covered in the 15 hours of instruction is all based on ITIL, which is an industry best practice framework. ITIL, I-T-I-L. Maybe my New York accent is coming through, but it's ITIL, Information Technology Infrastructure Library, and it is a series of 5 books. And you can go out on the web, ITSM Academy, Pink Elephant. There's a bunch of folks out there that have not only the books available, but some training. And it's not the most exciting read in terms of being a great book, but I've definitely taken a lot and shared a lot from those books on how to deliver service better. They're basically 5 books put together by over 1,000 service providers around the globe, brought together to actually just put together a best practice framework called ITIL.
Okay, actually, I think I found something here. I'll send that around. Okay, so we had another question. Thomas was asking about, do you think 100% utilization is a reality? He's basically saying that means no coffee breaks, bathroom breaks, client walks in. Where is he forced to go to, when people have to go to the sales floor, et cetera? Do you think that's a reality?
Good question, and certainly in certain cases, it depends again, right? So I took out the vacation hours and the training hours, and we were left with that bucket of 1,920 hours. So if you take out the hours that they can't work, sure, 100% is achievable. Is it reality? Probably not, but the way I used to work towards 100% utilization, really the only way I can see it, actually there's a couple ways I could see it, but one of the key ways I delivered against that was putting a body on site in more of a managed staffing role, and my tools were used while the tech was on site, in fact working quote unquote as an employee of my client. So I would bill them for 8 hours a day. And of course, if I took out the sick days that they were allowed and they took those sick days, I would achieve that 100%. But a lot of times folks don't take that 160 out. Again, I was very focused on how many hours can this resource work, and I want to cover my cost in those hours. So depending on how you look at it, you can get pretty darn close. And again, it's how you deploy that resource, right? Are they in the knock and spending 8 hours a day? Hey, are you going to count bathroom breaks? It depends how granular you want to get. I can surely tell you that we had a few smokers in my office, and I had people complaining that they would go out and smoke, but did I take them off the clock? No. So you just try to really balance out the reality versus what you're trying to achieve.
Okay, excellent. And this is a question I've heard kind of time and time again at some of these webinars. Ryan was asking, what's the best way to prove value for clients that are used to paying for break-fix services and usually pay much less than what we would charge for managed services?
Well, I think, I've got, again, as part of this content, I've got about 10 ROI examples, and you really have to kind of work through, for example, has a server gone down in the last 6 months or a year, or a desktop gone down, causing someone not to work or 5 people not to work. And the bottom line is, if you could take a server going down for 4 hours in a 20-user network and do the math, take the hourly cost of their employees and how long they couldn't work versus, maybe they could accomplish some work, but without access to their computer systems, were they down? Did it cost the business $20,000? And they're only going to pay $15,000 a year for your service? So either go back in the history of that existing client and look at times they've been down. The bill for the desktop might have only been $1,000, but what if it was the CFO or the CEO, right? The server bill might have only been $800, but if it was down for 2 hours and they didn't get email and they couldn't access their estimating tool for a construction company, what was the cost to the business? So you do have to have some examples of why it's better, and if it hasn't happened in that client, you got to create that FUD, that fear, uncertainty, and doubt that it could happen to them by using a case study from another client or two. So you just got to kind of dig around for some real valid points of why your managed service offering is going to help reduce problems, keep them up and running, as a result, provide more value to the business.
Excellent, FUD. That is the first time I've heard that one, but very applicable. And just to finish up here, I guess, we had a few people asking about this, and how can you had a bunch of Excel and spreadsheets, and how exactly can listeners get a hold of those again?
Well, if you don't mind somebody reaching out to you, you can shoot me an email, and I will forward you off to a rep who will probably give you a call, try to understand if you're an existing customer or someone interested in Autotask or just interested in the 15 hours of instruction, and try to have a conversation with you like a good sales rep would, and probably give you a price for the 15 hours of instruction, and then you guys can make a decision. If you'd like to buy the package or buy Autotask, maybe you get it for free. They'll apply that $1,000 voucher against it, and you get it for free.
There you go. All right. Well, I want to thank my guest, Len Di Costanzo from Autotask, and Richard, who was kind of in there and out a little bit. Len, any last parting words for the folks out there?
No, just, again, always congratulate you guys on, I know from my 20 years doing it, it's always tough to try to learn and work on the business instead of in it, and you know, I wish you guys all the luck, and I'll definitely look forward to seeing hopefully a bunch of you in New Orleans, and go see some of our folks in the other locations, and just reach out to Autotask. We'd love to help you out.
Okay, thanks, Len, and thank you everyone there for listening again, and please keep your eye out for that email that'll have the link to the webinar and other information. And thanks again, everyone. Thanks, Len.
All right, thanks a lot, Scotty. Bye.
All right, we'll see you. Bye.